Now, in some other news, there was a big move made by the Reserve Bank of India today to reassure mutual fund investors days after Franklin Templeton suspended 6 key debt funds. The central bank today released 50,000 crores, a move that has been welcomed across the board.
On account of the Reserve Bank of India has made 50,000 crore rupees available via banks for mutual funds within 3 days after the shock suspension of 6 debt funds by Franklin Templeton. That heightened fear of redemption pressure on other funds. So the RBI's aim is to prevent a contagion impact by reassuring investors there's enough money. Debt funds are meant to be safe investments, and Franklin Templeton is the 10th biggest mutual fund firm in India. So the move did send jitters in investment markets. So what is it that the RBI has done? The Reserve Bank of India has enabled commercial banks to give loans worth 50,000 crores against mutual fund investments and give loans against securities held by mutual funds. Remember, the 50,000 crore special liquidity facility will not be treated as usual risk lending and is in addition to the existing lending exposure by banks. This will be at a rate of 4.4%. The Finance Ministry's principal economic advisor, Sanjeev Sanyal, also tweeted that the government and RBI are committed to smooth functioning of the financial system. Even the former Finance Minister P. Chidambaram welcomed the move. He had earlier called for speedy action by the government.
RBI move would definitely help in boosting the confidence. Therefore, the move is a very welcome move in providing comfort to the market.
While the Indian stock markets cheered the RBI's 50,000 crore move to help investors, the question is, when will the government announce a larger economic recovery plan after the crash triggered by the COVID-19 pandemic? Sakshi Bajaj for NDTV.
Well, we're joined by Mr. Nimesh Shah, the MD and CEO of the ICICI Prudential Mutual Fund, on that big story. Mr. Shah, how important is this move by the RBI today? Do you think it has calmed a lot of nerves?
Yeah, what we had seen and what we have been continuously talking to the government is that since Thursday evening, when this NDTV and when this particular incident happened with Franklin Templeton, Franklin Templeton had always raised money from the retail in India, from the individual investor in India. So it is quite well spread in India. So being the 10th largest mutual fund, a number of investors have got affected. So we find people are quite shaken because they had expected they're investing in a debt fund, assuming that debt fund would give them lesser volatility. So suddenly their money getting locked. And while Templeton has given all the assurances that over a period of time, this is very important to understand for the retail investor also. It's not that because it was difficult to sell the products sell the investments in the market at this period of time. Over a period of time, Templeton has said that they will sell the assets and return back the money. So money will come over a period of time, and not if they want the redemption tomorrow, they can't get it. But over a period of time.
Did you get a lot of queries today? Did your company get a lot of queries from investors saying that they wanted to redeem their funds, or did people sort of take the RBI announcement with a big sigh of relief?
Since Friday, there was a lot of discussion we have been having with our distributors, we have been having with our investors, and continuously we have been explaining that this has been a one-off incident, and we are trying to make the customers or the distributors feel confident of what is happening. But this RBI statement, see, at the time when confidence is lost, people need a voice from the government, voice from the RBI. So when RBI said that liquidity is available, I think it has created a huge positive impact on the markets and the consumer sentiment overall. I think this is a question of retail consumer getting comfortable that if he invests in a debt mutual fund, it is not as risky as it happened on Thursday, and his money will not get locked.
Finally, Mr. Shah, is there anything more that you would want the government to do to reassure investors at this what is generally an insecure time for all of us?
I feel on a continuous basis, government making those statements and showing it by actions. Here we are showing it with the money involved, that not only with that money that they can lend into mutual funds, it is not necessary to lend. The banks can buy bonds also from the mutual fund. They can buy the bonds. They get the money at 4.4% as you mentioned, and they can buy the bonds from the market, and there is a very clean spread available. So it is infusing liquidity into the mutual funds, not only by way of loans, but also by way of buying out the bonds. Because what is important that if there is a redemption from mutual funds, it is important that over a period of time that we sell the bonds in the market and there should be buyers for it. This move assures the investors that if tomorrow mutual funds need to sell the bonds, there will be somebody who's ready to buy the bonds. I think this whole thing of buying the bonds is very, very important.
Mr. Shah, thanks very much for joining us, and hopefully this move will go a long way in reassuring many of us who've invested in mutual funds. It is something that many lakhs of people do every month because you believe that your money is safe. Thanks very much.